Let's start with the tax-free aspect of it. So anything that you transition the asset or transition into the life insurance policy, it's going to grow tax-free, and you're going to be able to pull cash flow out of that at any point in time tax-free, as long as it's structured properly. Upon death, whatever death benefit is still remaining, that's going to pass on to your beneficiaries tax-free. Those are more common known aspects about the pros of utilizing life insurance as a retirement plan tool. What most people don't know is the liquidity or the accessibility to your own cash, your ability to use it at any point in time. And so when it's structured properly, you can borrow money out of it, pay yourself back with interest, and it will grow as if you never pulled money out of it at all. So the pros of utilizing life insurance as a retirement plan is all the tax-free nature of it. You have the liquidity of it, so it's growing, you can access it. It's not correlated to the stock market, so as the stock market has extreme volatility, it continues to grow. And most importantly, it will protect, that asset is protected from a liability standpoint. So no matter what happens, no matter what your profession is, in certain states, there's extreme liability protection that goes along with life insurance. So it's a great tool to accompany other parts of your planning process, but again, not a one-size-fits-all, not something that we should say, hey, let's do all or none. But for most people, it's a utility knife investment planning tool. The great aspect of designing one of these policies correctly is the flexibility of it. And so you can design it to where, say, hey, I only want to pay 10 years into it. You could design it, say, I want to pay 15 years into it. You could say, I want to take it till the age I'm 65. But even more important than that is after you get the policy going, it will begin to generate cash value inside those policies. And if you ever have a year, like we all have, life happens, say maybe something happens in your business or something happens income-wise, and you can't make the asset transfer that you traditionally would make into the life insurance policy. When they're designed properly, you can skip that year and have an opportunity the following year to go back and make that up. So there's extreme flexibility in it. The other question that we get very often is, I want to start, but I believe in the future I'm going to be able to put more into this, but today I can only transition X. We will put alongside that what we'll call bandwidth or additional runway, because you do have to qualify for life insurance. The better or the earlier you do it, the less the cost of insurance is associated with the product. So people who do it young, we can put alongside of that additional bandwidth that at some point in time, if they want to flip the switch and put in more, all we have to do is do a conversion process. So it's extremely flexible.